looks like we kind of studied out. So we'll just go ahead and start. Thank you for joining us for the Start Omaha Work Week. Today we are featuring what makes a strong founder. Quick housekeeping items here. All questions need to be asked in the Q&A feature or the chat. They will get answered. We'll try to answer them the best we can as they go or as they show up. Please be respectful if you want to leave a comment in the chat. And if you would like to watch this program again, the recording will be posted on our DoSpace YouTube page later in the week. As a reminder, after each program, make sure you head on to Beanstack, our community engagement platform. There you can mark that you attended the webinars throughout the week, which will enter you in to win some prizes. We're giving away 3 gift cards to local small businesses and 1 headshot session. You can do this all at dospace.beanstack.org. And I will put those URLs in the chat in just a little bit here. Today we have John Bunting from Beeso Studio. He is the founder and CEO, has 17 years of experience managing products and co-founding several startups. He scaled development teams from 0 to 100 plus and managed portfolios upwards of $7.5 million. He previously co-founded Evis Technologies and started a startup studio in Las Vegas, Nevada. Now Beeso Studios takes a new approach to the startup studio model in Omaha. So I will hand this on over to you, John.
Yeah, thank you. Thank you for the introduction. And I really appreciate that. It's great to be here with everybody today and present what makes a strong founder. A couple points on that is, with my experience is that I worked for a number of years in the gaming space and Wells worked with different car companies and such. And so I know, ultimately, how to build and scale, applications and support them. One note on that is I did start Evis Technologies in Las Vegas, and that was a startup studio. I did that for a couple of years, and actually, as I did that, one thing we learned a lot by doing a startup studio in Las Vegas. And then what occurred is that we had some challenges with our model, and ultimately, what happened is we just ran out of runway, ran out of funding, and I moved here to Omaha. And it's interesting that I moved here to Omaha, and when I got here, I realized there wasn't a startup studio in Omaha. And ultimately, that's why, we started Beeso Studio 2 years ago. And, since then, we've basically been growing and working with startups. I would say, as we're going through this presentation, if anybody has any questions as we go through this presentation, as I talk about the attributes or the characteristics of a strong founder, please message, put the question out there in the Q&A, and then we can answer those as we go through them. The other thing I just want to get a gauge from the group here today is, if you could in the chat just post whether you're a founder, whether you're an investor, or if you're looking to getting in startups, so just so we have an idea of the type of audience that we're talking to today. That'd be really helpful. This is great. No, I appreciate it. It's great to have founders in this conversation and, learning about what to do and whatever else. And then obviously with startups, there's lots of different types of startups out there. There's startups that have to do for product. There's startups around software. There's startups, I know a lot of people look at even doing opening a store in a way could be a startup. There's a lot of different things to do as a startup or different types of startups. The startups that we mostly focus on are technology startups and some consumer product, but most of the stuff we do is technology. It's great to see what a good range of people in the webinar today in terms of their experience and what they're doing in the startup space. As we go through this, one of the things I want to really talk about first and foremost is context. I think it's important to have context where you understand our perspective on, founders and really what we think makes a good founder and what we look for in founders and really how we've come to that realization over time. Admittedly, like I mentioned, when we started Beeso Studio about 2 years ago, we really didn't have, a lot of information at that point in time. A lot of it was, just theoretical stuff we'd done, research we'd done and stuff in terms of what kind of founders you're looking for. But over time, I think we've learned a lot, and that's ultimately what's in this presentation itself. So first thing on that context side, what I want to talk about is, a startup studio in general in terms of what they are. I know it might be a little bit of a new concept or new topic. And as we go through the, our perspective and our experience, then we're actually going to be talking about, ultimately what are the characteristics of a strong founder. There's actually two different types of characteristics we're going to get into groups of. But on the startup studio, one thing that makes a startup studio different than incubators or accelerators is a startup studio doesn't have a defined program or a cohort or a graduation process or anything like that. We're very much a long-term relationship, long-term partnership with the startups we work with. It's not a new concept. As you can see here on the slide, there's a bunch of startup studios out there. There's a wide spectrum of their expertise and how they function. But really the first startup studio was founded in 1996. And ever since then, it's just kind of bloomed and grown. And I think around there's probably about 400 to 500 startup studios worldwide. And really one advantage with a startup studio, and I think that makes startup studios unique, is that we work with startups at a much earlier stage. Some of the startups that we work with are even just a napkin idea, where it's just, somebody has a rough idea, somebody just wants to do something. And that's where, we come in and partner with them and work with them on that. And ultimately the focus of a startup studio is building a startup itself. And that's, basically what we do and kind of the space that we operate in terms of startup studios as an industry. There's much more research you can do, and you could probably spend weeks and weeks and weeks diving into, all the different intricacies around startup studios. They've had some great exits. Dollar Shave Club is one of them. That's probably one of the bigger exits that have come out of a startup studio. And that was, I know it's been publicized, but it was acquired by Unilever for about $1 billion. And that was a wildly successful exit from a startup studio. One thing about startup studios, and I see here in the chat, is that they can work with any type of startup. We generally, Beeso Studio, we kind of specialize in the technology space, but it could be with education tech, it could be marketplaces, it could be social apps, it could be, SaaS applications, ultimately anything. And startup studios are, they all have their expertise, but we, on our side, we basically focus on technology. And that's, essentially what we do there. So going on from there, to give you a little bit more details around startup studios as a whole, or what we do, before we talk more about the founder side, is we have a process. And I think this process is, absolutely key in terms of, looking at founders and who they are and what they do. So we actively go out and we actively talk to startups. And I would say that overall we talk to probably, it's a few hundred startups. Yeah, we've talked to probably hundreds of startups in the last year. And so we're constantly going out talking to startups, and we do this discovery. And the discovery is really our first touch point with the founder. And a lot of times when we do that discovery conversation, I would say probably 90% of the time, or maybe a little bit higher, we actually don't move forward with a founder because of various concerns or risks or whatever it may be. So, we're very selective. And I think the founder, and the reason why we're talking today about founders, is the attributes of a founder, their experience, and all those different things that make up a founder, make up the startup. Those are key factors in our process of moving to the next step. The next step in our model and our approach, and I think it's very similar even for an investor, is because investors look for these same things, is they're looking for, who the founding team is, who's the founder, what's their experience, and so on and so forth. And those are key factors in that relationship. And so, for us, we have an evaluation that we do. I know that VCs and investors do something very similar. They look at your pitch deck, they look at, the opportunity, the market, the product, all these details. But one main contributing factor is definitely the founder. and their characteristics, their experiences, and how they do things. Because, as with a lot of things, the person driving the business, the person at the head of the business is, is a major component, major factor in terms of that business being successful. And that's why we focus a lot on the founders. On our model, once we look at a startup, do the evaluation, look at a founder and all these characteristics we're going to get into, we also look at the industry, we look at competitors, we look at their basically we build our own financial forecasts. We do a lot of stuff, research around the startup itself to determine if it's a good fit for our model. And then for our model, we basically, if it is a good fit, we end up into a partnership with them. And that partnership translates into really two components. There's a services component and there's an equity component. And on the services side, because there's that equity component, we're able to save founders and startups roughly about 40 to 70% on the costing of actually launching and building a startup and getting it to market. So we're very cost optimized on that side. But to get access to that, to get access to our team and our abilities and our network, that's going back to the founder and who that founder is. And so I think, when we have a conversation, a few months back about presenting and what to talk about for Start Omaha, we felt that talking about the founder and what those attributes was really important, because if more founders are aware of what those people are looking for in terms of VCs or startup studios or investors or whatever, founders can either recognize some of those attributes they have, or they can either look at filling those gaps or finding other co-founders to help fill those gaps. So that's sort of essentially what we do and how that relates to founders themselves. The next slide here is just to kind of talk about our overall, what we've done so far and what those founders look like. These are the startups that we're currently working with. There's 11 startups in our portfolio. 8 of those startups are in the US. And then we have 1 startup in Canada, and then we have 2 in London, England. And going back to the conversations with founders, is that's ultimately for us, we look at founders anywhere. So we're very, doesn't matter where you're located. We have these conversations, and we're ultimately looking for really strong, really driven founders who have these great attributes, who can really carry a startup forward. Because doing a startup is certainly challenging, but there's, huge opportunity. And I think that's why there's definitely a lot of interest in doing it. With the startups with the startups in our portfolio, we've actually been able to launch 4 of them from literally an idea to a customer. And then we have 2 of them that are actually launching within about 3 weeks. So in total, about half of the startups in our portfolio, we've actually been involved with getting them from 0 to actual customers. And also with our startups in our portfolio, I think this is going back to, because we're selective on the founders and we're looking for certain types of founders, we've raised about $2 million for the startups in our portfolio. And that is just a great success story there within the short time that we've been working with these startups and getting them to where they are today. But I think a lot of that is going back to this, the founders and what they do. And we're going to talk some more about that. But just to give you some context, that is some of the traction that we've seen, and it's all going back to the founders themselves. One thing, like I mentioned before, is that we talk to 10 to 20 startups a week on the average. And then, like I mentioned also, is I would say probably, out of those 10 to 20, probably about like 90% of them don't make it past that first step. And then overall, we've talked to hundreds of startups and done lots of evaluations and whatever else. But I think the biggest contributing factor there is the founders. And I can also tell you that, with the conversations we have with investors, angel investors, investor syndicates, which is basically a group of angel investors, as well as VCs and angel groups, they mention the same thing about the attributes of a founder. And it's so important, having founders who just understand the commitment level and what is needed to be successful. And I think a lot of times people sort of miss that, and they miss that, you know, doing a startup is challenging, but it also takes just people who can really think dynamically and outside that box. And so there's a lot of input that we've been taking in terms of what makes a good founder from external sources, which would be these VCs and investors and such, which I think ultimately translates into, you know, where our startups are in the portfolio that we have. In the portfolio that we have is, you know, spread across lots of industries. We have some in the recruiting industry, some in transportation. We've got some in, you know, social and video sharing. We've got startups in, you know, basically SaaS applications or sales enablement tools and other types of tools, and even tools in the education space. So we've got startups a wide variety, but I think the main thing is that all these startups, you know, have founders, and the founders with these startups have common attributes, positive attributes that help them move forward and be successful. The thing I want to talk about here is ultimately getting into those characteristics. So the first set of characteristics we have here are really, I call these hard skills. These are skills that you've gained over time with experience by actually doing something, either by working at a job, you know, building out your professional network, having conversations, you know, actual work experience, life experience, stuff like that. All this stuff kind of falls within that experience bucket. And one of the main ones that we've always found is pivotal is industry experience. So if you're a founder, one of the things that we find is that if founders who do not have industry experience, they certainly struggle because they're coming in from the outside. There's one particular, I won't name names, but there's definitely some startups. There's startups in our portfolio and startups outside our portfolio that we've encountered. And one of them was in the education space, actually. And they're struggling a little bit because they don't work in the education space. They work in a completely different industry. And so their network is somewhat shallow in the education space. We have another startup with a very similar challenge. Is they're in the music industry, and that founder doesn't have music industry experience. So now there's ways to bridge those gaps, which we're going to talk about in a second. But when you're coming in from the outside, it's very challenging. Now, the other scenario there is if you're coming in from the inside, where you have industry experience. If you have industry experience, you know, odds are you're going to have a great advantage in terms of accelerating growth and getting the connections you need and really building out the company. There's a couple of startups in our portfolio, startups that we've met with, startups that we've had other conversations with, that the founders have industry experience. They have deep industry experience where they've been working in the industry for 5, 10, 15, 20 years. And they really know, okay, if I need something, I got this person to call. If I need something else, I got this person to call. If I'm going to go do this, this is the person I need to take that to. Here's the company I need to go talk to, where they really know that industry. And they know also in terms of a product and a service, they know what that industry wants and demands. I love working with founders that have the industry experience, because generally speaking, somebody with industry experience will come in and be like, hey, I've been working this industry for 15, 20 years. I know this problem exists and nobody's solving it. And if I build something, I know exactly who to take this to get my first sales. And those are really exciting conversations to have. That's why industry experience is definitely, really top attribute, I would say, for a founder to be successful, is work within industries that you have that deep experience, or go get that experience. Or transversely, the next thing would be attract the talent. Attracting talent is a major factor with startups. There is some statistics on this, but basically solo founders, on the average, and there you read some articles around this, but they take about 3.5 times longer to scale than a startup run by a group of founders. 3.5 times longer is a long time. So if you figure, if a solo founder is going to take him, we'll say, 3 years to scale, you put 2 founders together, 3 founders together, they can scale in a year. It's a significant time advantage. especially when you consider external factors, competitors, and everything else going on out there. And also, I'll tell you that, investors are certainly more attracted to startups who have founders who complement each other, which goes back to that whole industry experience, anything else ultimately, where if you recognize that there's a couple limitations you have or things that you're not good at, go find a co-founder who can actually help you fill those gaps. And the advantage there is the fact that you can complement each other. You can find ways to accelerate. You can push each other. You can basically just collaborate, bounce ideas, all that stuff. And, one of the things that we've talked with founders about in general in the conversations that we have is when you need to build your team, go recruit a founder, go recruit a co-founder if you don't have one. And that's really your first point of validation, is that conversation you have. If you can't, take your idea and sell the vision to a co-founder, really the next question there is, how are you going to sell it to a customer or an investor? And that's why it's so important to find those co-founders who you can work with. Very rarely, and I can't think of any off the top of my head, but very rarely is a startup not have a co-founder or a group of, key people initially to get off the ground. It really takes more than just one person. I've talked to some founders, and one of the concerns they have is, well, I don't want to bring on a co-founder because now I have to go give that person equity or whatever. But the reality is that, the old saying, a company worth zero is still worth zero. You can either have 50% of something or, 100% of nothing. So it's just the reality of it. So, always look for ways, look for a good founding team. I think it's incredibly important there. The founder themselves also, in terms of attracting talent, becomes the center of the universe, becomes the energy center for that startup. And you're bringing people into that universe, bringing people to attract around you, and then ultimately help you scale. I got a question here. What's the best way to find a co-founder? Great question. So a few things. One, your own network, people within the industry, friends and family, coworkers, past coworkers, whatever that may be. Another thing is LinkedIn. I know is a great source. 20 years ago, we didn't have LinkedIn. Now we do, which is a great place to connect and find people. And you can literally go on LinkedIn and start searching for people, in your city with a particular type of experience, and start, connecting with them, start having conversations. And it's a relationship, so it takes some time to build out. The other thing I know people have done is literally post a job. Going back to selling that vision, write up a job description, co-founder needed, for whatever role. And you write up the job description, list out the job requirements, and then you start talking to people and start interviewing. Ultimately, it's a relationship. So you want to make sure you take your time and you methodically go through and talk to the right people, get feedback, get input. But there's a few different ways to actually go find a co-founder. And then I know that there's websites out there that actually cater to, co-founder. I think there's one, cofounder.com or something, but there's websites out there that you can also go and post for co-founders. But I would recommend finding a co-founder in the city that you live in, because you want to be able to have face-to-face conversations. I know with the era of COVID and whatever else, Zoom meetings, we don't have them as much, but I think there's value in having a face-to-face conversation, especially with a co-founder, because you're going to be, together with that person potentially for a very long time. Going on from there, so going back to being a founder and such, I think just going back to attracting great talent. The other thing just to mention here on the talent side is look for an advisor. Could be informal, could be formal, but this is going back to building your network, getting people in that circle that you can talk to. Truthfully, I have lunch. There's a couple advisors that, I meet with once a quarter. We have lunch, and it's incredibly valuable. I can't tell you how much you can gain from sitting down with somebody who's successfully run a business and bouncing ideas off them and getting their input. Lunch is cheap, but that advice is, immeasurable in a way. because it helps you understand, okay, these challenges are similar. These challenges may be unique, but it really puts things in perspective and helps you give, different ideas and different thoughts. And just getting advice from people. I think getting advice from people in the business community or people who've run businesses before is incredibly valuable, especially if you can find an advisor who's also worked in the same industry as your startup. That's really a double bonus there, because now you're talking to somebody who knows the industry that you're now have a startup in. Next attribute I want to talk about is network. And this is very similar, going back to connecting with people on LinkedIn, coworkers and such. But really look at your network, look at the community that you're in, and find ways to reach out to them and have conversations. Just making those connections, even on LinkedIn, I practically connect with everybody on LinkedIn, because you never know at what point you may need to go talk to that person. Or when you need to go search for who can do this or who knows that, LinkedIn is a great source to do that. I'll talk about another scenario here is that, and we did this last year, we started January 2020 with, just a handful of investors in our network. So, we had, I think maybe 5 or 10 angel investors we were connected with and we had some relations with and such. And one of the goals that we had last year was to basically expand that investor network. Because we work with startups every day, and because we were very much in the startup community, having a network of angel investors and having connections with angel investors is very important. Also because of the stage that we work with in terms of these startups. These startups are very, early idea stage startups. And so they're going to be raising money from, friends and family, people in their community, people at their church or whatever. And then sort of the next level up is an angel investor. And so we made it a goal to connect with angel investors. Last year, because of this effort we did to build out our network, going back to LinkedIn, we actually created some messaging and literally started connecting with and messaging angel investors. By the end of the year, last year, we had connected with about 500 angel investors in the United States, and I had meetings with about 100 of them. And so going back to building your network, you either have a network that you can utilize right now, and if you don't, go find ways to build that network. Because, certainly, some of the angel investors we've made introductions to our startups, and the majority we haven't, but a few of them we have. But the point being is, because we built that network out, we know it's there and that we can always reach back to these people because we've established a relationship with them. And when you're building a startup, there's a lot of challenges. So the more people you're connected with, the more people it becomes this web of support in a way. The other attribute I want to talk here about is communication. And communication is just, it's an important thing. It's a very basic item, but ultimately know your audience that you're communicating with. If you're communicating with investors, understand the terms and the things that those investors want you to know and say, like know what somebody says term sheet, know what that means, know what a convertible note is, know what, a safe agreement is, know what, if you're talking to marketing, maybe user acquisition costs, lifetime value of a user. There's a lot of terms out there. The point is that, make sure that your communication style is appropriate for the audience that you're speaking to, whether it be a customer or whether it be a startup or whatever else. And I think for the most part, people have this down, but we've also seen some challenges in this area where, a founder of a startup isn't exactly in sync with the industry terms. And when you're the founder of a startup, you're really the face of the startup. So how you communicate, what you do is very much the perception of your overall company and your startup. So it's just something to definitely be aware of. And I think having good communication skills, good presentation skills, and those things you potentially pick up over time, like going back to the experience, I think those are valuable things. The next one we'll talk about here is business acumen. And what I mean by that is there's lots of different stuff in business. Like I mentioned, in terms of investing and operating agreements, term sheets, convertible notes, whatever else, licensing agreements, there's all this stuff out there. don't be afraid to get your hands dirty. We really like to work with startups who, are like, hey, I don't know what this is, but I'm going to go figure it out. And that they're able to go do the research, go do some homework and figure out what that is, come up with, just what those terminologies are, and really what needs to be done to build out a financial forecast, and what needs to be done to figure out your margins, and how to ultimately run a business. The one of the things I will note is that, and we've seen some founders not really want to get into this whole, like, how do you run a business sort of thing, because it is a business. It's a great idea, but it's also a business operating the side of the business. And one note here is that you can delegate this stuff off to somebody else. However, if you delegate, you run my books, you manage my QuickBooks, or run my bookkeeping or whatever. If you do those things, they have a cost. And as a startup, you're very cash sensitive. So the more you can do on your own, the better. Also, it protects you in a way, because it allows you to become an expert in that particular area and ensure that, how it's being done is correct, and you're not being deceived, and things are being done the way they need to be done. Now, obviously consult with experts, and, sometimes you certainly do need some professional help with legal and whatever it may be, but try to do some homework first before you go delegate it off to somebody else to do, at least so you understand what it is at a high level. And I think the startups that actually, understand this stuff, are the most successful. The founders are, because, there's founders that we're working with right now. They've raised money, and they understand what a, convertible note is, and all the different intricacies with convertible note. Even though they're having a lawyer draft a convertible note, they understand from their perspective on what that is. And then, like I said, we've seen other founders who are like, hey, go have, I'm going to go have my lawyer do this. And they don't get into the details. They never even read what the lawyer produces, and like, well, you probably better ought to know what's going on there. So, get your hands dirty, do some research. It's good to see founders really engaged and really wanting to learn all these different facets of their business. Because ultimately you're trying to grow this from zero. And the more you do on your own, the better off you're going to be. The more that you can do. Obviously, you consult a lawyer and such when needed. The next one here is probably one of the bigger challenges that we find, is knowing your customers. There are a lot of startups out there who've built a product without customers. And, this goes from lots of meetings that we have. They built a product, and now they're like, now I need to go find a customer. The challenge with that is you have to go find a customer, and there may or may not be a customer for that product. So do everything you can to get validation before you have a product. Now, you can have a product in development. You can have a product, at some phase of that development phase of getting it to market. But definitely, talk to customers early, get in front of customers early, have conversations with them, do a survey, do anything to get that early validation. So then you're basically making sure that as you progress with that product, you're getting those touch points and checkpoints saying, hey, are we still on track for a product that customer will purchase when this gets to market? Doing those things will help keep you in check. It'll help potentially maybe save you from building features that nobody wants, because features have a cost. Everything has a cost. And so really understand the product, understand your customers, and how that correlates before you really invest too much. The other thing here is, sell what you have on the product side. Going back to your customers, going to your customers, talking with them, figure out what exactly is necessary for them to use your product. What is the absolute minimal thing? And there's a concept of MVP, which is great, but that MVP has to be tied to, if I'm a customer, this is the minimal viable product I will accept, not me as the startup owner, this is a minimal viable product I want to get to market. You need to figure out what the minimal viable product is that your customers want. That's the absolute key. So having that validation, knowing your customer is incredibly important. And then once you have those customers, don't ignore them. You continue fostering those relationships with your customers. And the more you know your customers, the more relationship you have with them, the more you're talking to them, especially early customers, are incredibly valuable. Um, there was one startup that we talked to a while back, and they had this really interesting scenario. They launched a beta. They had a product, built the product, launched a beta. They had about 60 users on the beta, customers using the beta, and everything else was going along great. And then they said, hey, I'm going to stop the beta, kick everybody off, and then go back and do development. So that's exactly what they did. So they shut it down. Customers could no longer access the beta, and they went heads down, did development, built a new product, or basically added features to the existing product. And they're like 6 months later, they're like, oh, now we got to go find new customers. And you're like, well, first you killed your beta customers. And, second thing is unfortunately you killed your beta customers. And then it's like, well, go reach back to your beta customers because they were already using your product. The point is that your customers are incredibly valuable. Someone told me a while back is that a customer, a user on like a SaaS product is worth around $1,000 valuation. So if you have, if you've got 100, users or whatever it may be, all you got to is just multiply that 100 by 1,000, and that gives you a rough valuation of what your startup is. So 100 customers, you're a $100,000 valuation. The point is that every customer is valuable because every customer can give input, feedback, you can remarket to them, everything. So it's absolutely key. Getting from your customers as early as you possibly can. And really just foster those relationships and listen to your customers. And like I've said, the most successful startups that we've seen, they don't wait for a product to be fully built before they engage customers. The couple ways to do that is with pre-sales, pre-qualification, letters of intent. There's a bunch of mechanisms you can do. You can do demos, you can do all sorts of stuff. You can do slide presentations, whatever. The point is, find customers, engage your customers, get feedback, get it early, do it early before your product's ready. That will save you a lot of pain. Plus, it creates a situation on the sales side where when your product does launch, you now have a pulling effect versus a pushing effect. And what I mean by that is you're now being pulled, saying, hey, we want access, we want access, we want access, by the customers. They're saying, give us, give us, give us, versus you trying to, hey, it's now launched, go use it, go use it, go use it. It's a different effect. And when you have customers begging you for access, that's the position you want to be in, because that means you've got validation, you know what they want, you have a product they want. And then really the pressure there is just getting it stabilized and getting it ready for them to start using it. So I think that's an absolute key thing. The other thing in terms of your customers, the flip side of that is know your competition. Everybody has competition. And interestingly enough, we talked to a lot of founders, a lot of startups, and this is also going back to our process. One of the first things we do is look at competition, because if you want to understand the value of what you're doing as a founder, you should know your competition. So if I'm going to go open, a store like Walmart, I'm going to look at Walmart and their model and their growth pattern and how they operate and figure out how to tweak that model to be successful. So knowing your competition is incredibly valuable. And plus, knowing your competition also gives you some sizing relevance with how large the company could potentially be over time. And what I mean by that is, if you, based on our analysis and our research, if you look at 3 or 5 or 10 different competitors, and if you track their revenue growth over time, there's a similar pattern there. And so if you know your competition and you look at their revenue growth pattern, you can potentially replicate that same growth pattern, with some caveats. But the point being is you should be able to somewhat replicate that same growth pattern. So keep that in mind, that your competition gives you great insight, and it also allows you to figure out how to really differentiate yourself in a market you're getting into. And sometimes markets, truthfully, are oversaturated. So you may look at your competition and be like, well, there's 500 companies who do the same thing. It doesn't make any sense. Or you might do your analysis on a competition and realize, hey, there's like one or two or whatever. I always, when people tell me there is no competition, I always doubt that. And usually I'm able to find something. So just be aware that there's always competition. It may not be similar, but there is always something out there. If you spend enough time Googling, you can probably find it. A couple quick notes I'll just make here is that in terms of your competition, knowing your customers and such, there's a couple websites. There's one called Crunchbase, which is a great resource to go look at companies and get an idea of what they're doing, their exits, their valuation, the number of employees when they're founded. Crunchbase is a great database. There's another site that we use often called Owler. And then there's some other sites out there that you can find similar, but you can learn a lot by really looking at your competition. Also, if you know your competition, it's going to conversely translate into knowing who your customers are and how to target them. So there's real value there. Going on from there, I want to talk about basically these are more softer skills of a founder. And the first one comes to my mind, which is determination. I had a meeting with a VC in San Francisco, venture capital in San Francisco, and I get on the call with him and we're talking about startups and founders and whatever else. And he's like, really, one of the first things that he says to me is determination. We want founders that are determined and have grit. And I thought to myself, that's a really good point, because a startup is not a sprint, it is a marathon. And we also talked about running and the concepts around marathons and the fact that it is not like I run a couple blocks and I'm done. It is a long marathon that you have to run, and you just have to stick with it. And I would also say that, going back to the running analogy, that, starting and then stopping and then starting and stopping doesn't do you any good either. So you always look at a startup as a marathon and go in that with eyes wide open, understanding what that is. Because determination is really a key attribute there. And I also look at determination as an internal motivation and drive to do something. The other note here is that, for determination, and some people just don't have that determination, which is okay. There's a startup that we've had some conversations with, that the founder, the guy who invented the whole concept, basically said, hey, you know what? Great idea, great whatever, but I don't want to run the company. I'm going to go hire a bunch of people to fill the roles and run the company. Needless to say, that founder, because he's not the head of the company, they're having a lot of, it's a lot of disjointed, it's a bit of a mess in terms of getting that off the ground, because the founder's not driving it. The founder doesn't have that determination to go drive it forward. So, having determination is definitely valuable. I would also tell you that investors are looking at as well, is, how committed is the founders? How committed is the founding team? What's their commitment level? Have they put money in on their own? Doesn't matter how much money. It's just a question: they willing to put up their own money? Are they willing to ask their friends and family for an investment? Because, ironically, and we run into this all the time, it's a lot easier for people to ask a complete stranger for money than it is to ask their friends, because their friends, they have to see them all the time and they don't want to ruin the relationship. But stranger, who cares if I lose their money? So these are things to be aware of when it comes to that determination and the commitment level. Investors are looking like, hey, what is your commitment level in actually making this happen? And that's going back to the conversation with the VC. So, determination is definitely key. The other one here is focus. We find a lot of founders, for one reason or another, they have the shiny ball syndrome, which is they see a shiny ball and they focus on that shiny ball until a new shiny ball shows up, and then they focus on that one, then they focus on another one, and they can't focus on moving something forward. There's a book about startups. I forgot what the name of it is, but basically it's, one of the concepts in there is build, measure, learn. You build, you measure, you learn, and you just keep repeating that process over and over. Chasing every shiny ball doesn't allow you to build, measure, learn. All you're doing is building and then abandon, build, abandon, build, abandon. That doesn't get you anywhere. So really focus on what you want to do and what it is and execute. Don't fall into an analysis paralysis phase where you're just constantly analyzing and not executing. Uh, One thing we found interesting about this, and 2 points here, is one, there's a window of opportunity with every startup. I don't think people realize this, that when you have an idea, when you're going to launch a startup, that it's a window. It is literally a window, and that window will close at some point in time where you see an opportunity, you need to execute on that opportunity because eventually it will close. And we've seen this with startup after startup where the founders didn't move fast enough, and I think ultimately that is it. They just didn't move fast enough for whatever reasons. They either fell into the shiny ball syndrome, they fell into, analysis paralysis, they fell into, whatever. And what happened is they're just, that window's closed. I can think of two off the top of my head that, one startup we were talking to, actually, we started talking to them in July. It was a great concept, great idea, great everything. And, 9 months later, there's like 10 other startups doing exactly the same thing they were doing 9 months ago. Meaning, if they were going to go do their startup now, the market's oversaturated. It doesn't make any sense. And so it's kind of one of those things where there wasn't a window of opportunity, and that window closed. It's just gone. There's nothing you can do. So focus is incredibly important there. And I think founders, the good founders we work with and the ones that we talk to recognize there's a window of opportunity. They seize that window of opportunity. Going for investing, you have to build, as a founder, you've got to build a product. You've got to raise capital. You've got to, keep scaling and figuring out how to keep pushing forward with customers. There's a lot of different things you're pushing. And as long as you spend time focusing on the important things, you'll be in a good position. And that's true. Like when it comes to raising investment, having that as something that you're always focused on, that's one of the things you do. I would say probably about 25% of the time, at least, founders who are successful, they spend time raising capital, talking to investors. And sometimes these relationships take months and months and months to foster. Like it could be, I know one startup particularly, they spent the last 6 months talking to investors. Now, the good news is when they're ready to invest, they send a couple emails and they've got, 15, 20, 30 people interested in investing, but that's because they've been doing it for 6 months. So focus, and understand it's a marathon. The other thing about focus is don't take unnecessary risks. Building a business is very complicated. There's a lot of moving parts. Don't do anything that overcomplicates it. Life is complicated enough, and the more you can simplify, the better. Just that is, that's one of the things we found is some founders are like, well, I want to go do this, and then go into this area. And we talked to a startup in Miami, and they had all this technology they wanted to do, but it's a very simple concept, and doing a simple concept will get you there a lot faster. I have a question here. Let me just read this one off. What do you think of doing a startup against strong competitors? I'm trying to get a market share of education puzzle. Okay, so really the question here is about what do you think about entering into a market with strong competitors? Really, there is it's going to go back to get validation. What do you have that's unique first off? So in terms of knowing your customers, do you have access to potential customers today who would buy that product if it was available? That would give you an advantage. Great example. I mean, there's lots of taco shops in town. Everybody likes tacos, but the point is that if I open a taco shop, how am I going to get an advantage? Is go find customers who are ready to buy and want my tacos. They can go somewhere else, but they want them from me. And then figure out what makes you unique in that space. What really gives you a competitive advantage over them. Maybe you've got great hot sauce. I don't know, whatever it is, but look for those things, competitive advantage, and then also making sure that you have customers ready to buy and who really want what you're looking at doing. That's probably the main thing there. And obviously you'll look at your competitors, and the other thing you can do is go around and actually go use what your competitors products, because going back to the taco scenario, I know it's a horrible scenario or example, but the point is that maybe you can go try out all the different other competitors, see what they're doing, and then build out a matrix of what makes yours unique or how you could be unique to capture some market. But it's definitely the competitor aspect it's a risk. I mean, truthfully, it is a risk. You'd have to do some serious homework and research on that to really identify what makes that unique. So moving on from there, the last couple items I want to talk about here is being dynamic. Ultimately, dynamic, being flexible. Don't be, be ready to adjust and do what's needed. We've seen startups that were trying to, launch a product and they actually got success, but then they got scared. Don't be afraid of success. If you have success, keep doing the same thing over and over and over and just keep pushing forward. Be prepared for whatever happens. Always look for options, look for solutions. We always like to work with founders who come to us and say, hey, here's the problem. I think there's 3 or 4 options. What do you guys think? Those are great conversations to have because they're all within, solutions within reach, and solutions have been thought through already. And that's just a matter of picking the best one. Just understand there will be challenges. That's just the nature of the business. I mean, you're always going to have challenges with any business. The other comments here, just collaboration as a whole. Take advice, listen to people, be always open when you're having these conversations, talking about founders, talking about your network and the people that you're connecting with. Really make sure you're collaborating and doing those things. The last one I want to talk about is probably the next most important thing, or the last important thing here, is the drive. This is more of an external thing where a founder is really there to drive and push things forward. Founders, you really can do anything if you have the drive to do it. And I think, fear is kind of what holds people back in a way. I think fear is what holds some founders back because they're afraid of success, they're afraid of failure, they're afraid of talking to people they've never talked to before, whatever that may be. And ultimately, you got to have the drive to get past that. And, go get in front of customers, go figure this stuff out. If this is something you really want to do, you have to drive and push it forward. Even when you have those people on your founding team, the CEO, the person who's really the visionary for that startup is the one kind of driving things forward. And you really need to continue focusing and continue pushing forward, which goes back to the marathon concept as well. And I would say ultimately on the drive side, execution is absolutely key. Getting out there, making phone calls, talking to people, and the drive is just incredibly important. The one thing also is that, I can tell you that one of the startups that we're working with is they had done some of these things that we're talking about. And I can give you a quick summary here is that they went out there before there was a product, they started talking to customers, and they were talking to customers and they were basically having these conversations even before the product was ready to launch, and there was bugs and whatever else because it was software, and that's just software. And there's some complexities with it. The point is that because they had the drive to go do that, because they just didn't sit and wait for this software to launch, they actually took software that was not ready, did demos, set up meetings, had presentations, did all that stuff before. When their software launched, they had a great scenario where they had, between 1,500 to 2,000 users ready to get on that platform when day one came around. And that's because they did all that prep work. And also keep in mind, some of these users are paid users, which is huge. So the point is that, while you have to look at the focus is so important. There's lots of different moving parts, but continue moving this stuff forward, and you kind of figure out all these things are like levers, and you have to pull all the levers equally and at an appropriate time and just keep pushing forward. But, ultimately as a founder, and the one things I want to get to sum this up is it's more of a hub and spoke model. And I want to be absolutely clear on this in terms of what we find is it's really come down to founders. there's all these attributes that we're talking about, and there's a lot of things to consider. But ultimately, when you find people to work with you, and where it's, it's 1 or 2 or 3 founders, and you're all working together, going back to pushing these levers, to having all the attributes that are important, either improving them or already have them, I think that ultimately you can be successful from there forward. And the reality is that these are the characteristics that we've seen. These are the characteristics that investors see. And I think ultimately, even with the portfolio of startups that we're working with and startups that we've engaged, these are also similar characteristics that they're looking for as well. So, and that is it. So we can take, I know we got a few minutes left. I was going to say we can open it up for questions if anybody has any, or we can give back the last 5 minutes. Any questions in the chat, or any other questions?
All right. I think, there is one Q&A.
All right. What do you recommend for increasing business acumen? I would say, in terms of, this is about what do you recommend for increasing business acumen? I would say ultimately, as you grow a business, there's different things you need to be versed with and understand at different points of time. Obviously there may be a point where you're trying to raise money where you have to go learn about raising money, or there may be a point where you're trying to learn about how do I set up a website. Ultimately, I hate to say this, but Google's your friend. Do lots of research, whatever that thing is. If you're trying to learn about marketing or whatever, there's a lot of sources out there. But the great thing I have to say here is don't be afraid to go learn and teach yourself and educate yourself. Any other questions? Okay.
All right. Well, thank you, John, for presenting for us, and then for everybody else, thanks for joining. Don't forget to check out everything else we have going on this week, as well as our YouTube channel if you want to watch any other videos. Looks like we had one more Q&A come in if you want to answer that, John.
Yeah, so this is about cold calling. There's a lot of different strategies on that. It depends on who your target customer is and such. I would say you can go to our website, Beeso Studio. You can find us if you just Google that. We're in Omaha. You can contact us, and maybe we can have some more conversations. But cold calling is a challenge depending on who your target customer is and what that looks like. Yeah, that's a whole other presentation. But thank you.
All right. Well, thank you, everybody, for joining us. Have a good night.
Okay, sounds great. Thank you very much.
Yep, bye.